Hello world, welcome, I'm your host, Mr. Stag. They don't advertise, rarely make headlines, and most people outside the energy industry have never heard their name. Yet Vitol is the world's largest independent oil trading company, quietly controlling a staggering volume of the global energy supply. Every day they move over 7 million barrels of oil, roughly Japan's entire daily consumption, and generate revenues topping $400 billion. This ultra-private company trades more crude oil than Chevron, Exxon or BP. It rakes in more revenue than Apple, and yet most people couldn't name a single executive behind it. This is the untold story of Vitol, how two men in Rotterdam built a global energy empire that no one talks about, but everyone in the industry fears. Behind this secrecy lies a carefully built culture of discretion and speed. Their employees are among the sharpest in global finance and commodities, yet they rarely speak publicly. In a world where perception is power, Vitol's silence has become its strongest weapon. Vitol's story begins in 1966 in the bustling port city of Rotterdam, Europe's largest harbour. Founded by two Dutch entrepreneurs with an initial investment of 10,000 Dutch guilders, approximately $2,800 at the time, Henk Viëtor and Jacques Detiger, the company was originally a modest operation focused on transporting fuel oil by barge along the Rhine River, playing a small but reliable role in Europe's post-war energy needs. But who were these men? Henk Viëtor, a seasoned trader with a deep understanding of the oil markets, lent his name to the company. Vitol, a portmanteau of Viëtor Oil. Henk Viëtor was born in the Netherlands in 1940. A gifted student, he pursued higher education at the University of Amsterdam, eventually earning a doctorate from the University of Leiden. Early in life, he developed a strong interest in science and innovation. After Vitol's initial success, he became a serial entrepreneur, founding several biotech ventures, including Skyline Diagnostics BV in 2005 and MyLife Technologies BV in 2008. He served as CEO of Skyline Diagnostics until 2012. Viëtor passed away in 2014. While his personal net worth was never publicly disclosed, estimates suggest he was worth tens of millions of dollars, though much of his wealth was likely tied up in private holdings. Jacques Detiger, born in the 1930s, was more reserved but equally vital to Vitol's DNA. In 1976, he took over as CEO, guiding Vitol through a period of rapid expansion and global positioning. Detiger maintained an intensely private life in keeping with Vitol's secretive culture. Public records of his later life are scarce and his death date remains undisclosed, consistent with the firm's low-profile ethos. Like Viëtor, Detiger's exact net worth isn't available, but he likely accumulated substantial wealth, potentially exceeding $100 million given his leadership tenure and Vitol's early growth. Despite its humble origins, Vitol's founders had big ambitions. By the 1970s, they were already expanding beyond the Netherlands, opening a trading office in Geneva, Switzerland, the world's energy trading hub. This move would cement the company's role in international energy trade and set the foundation for a business that would soon span the globe. What sets Vitol apart is its fiercely private ownership structure. Unlike publicly listed oil majors burdened by shareholder demands and quarterly earnings reports, Vitol is owned by a tight-knit group of partners. This freedom gives the company unparalleled agility in an industry dominated by state-run giants and multinational corporations. Vitol began to diversify beyond crude oil, trading in natural gas, liquefied petroleum gas, power, carbon credits, and even metals. With offices established in London, Houston, Singapore, and beyond, Vitol's reach grew global. The company's partners invested heavily in physical assets, owning stakes in refineries, storage terminals, ports, shipping fleets, and exploration ventures. This vertical integration allows Vitol to profit at every stage of the energy supply chain, insulating it from market shocks and maximizing returns. Vitol's success rests on a business model built for flexibility and secrecy. Vitol is not just a middleman. By owning infrastructure across the supply chain, from shipping terminals, storage facilities, refineries, exploration fields, and even power generation assets, Vitol controls costs and reduces dependency on third parties. This structure enables the company to capture margins at multiple points, whether in buying crude, refining it, shipping it, or selling refined products. And all of this happens behind a veil of confidentiality. Vitol rarely discloses details about its trades or partners. As of 2023, Vitol employed around 1,600 people globally. That's a surprisingly lean team for a company with revenues exceeding those of some Fortune 100 giants. Its size underscores the efficiency and high-performance culture that defines Vitol. Every employee is expected to perform at the highest level, but the most staggering figures are in what Vitol trades. Crude oil, over 7.4 million barrels per day, equal to the daily consumption of Japan. Refined petroleum products, nearly 6.8 million barrels per day, ranging from diesel and gasoline to jet fuel and marine oil. Liquefied natural gas, LNG, over 17 million tons traded in 2023, making Vitol one of the largest independent LNG traders. Liquefied petroleum gas, LPG, around 10 million tons distributed across Asia, Europe and the Americas. Natural gas, roughly 1,700 terawatt-hours, TWH, traded, putting Vitol in the upper echelon of European gas market players. Power and carbon credits, over 1,200 TWh of power and significant volumes of carbon offsets, making it a major player in energy transition markets. Metals and emissions. Vitol has expanded into base metals, battery materials and emissions trading, quietly building a foothold in the raw materials of the future. All of this is coordinated from a tight network of key offices in Geneva, London, Houston, Singapore and Dubai, giving the company a truly global footprint. Such discretion has fueled an intense internal culture. Sources describe a high-pressure environment where traders take big risks, but the rewards can be enormous. It's a trading floor where billions move in seconds and timing is everything. This business model is deliberate. For example, Vitol owns stakes in the Fujairah oil terminal in the UAE, one of the largest storage hubs in the world. It also has influence over refining assets in Europe and Africa, and even trading floors that move carbon credits tied to climate policy. By embedding itself into every link of the energy chain, Vitol makes itself indispensable to producers, governments, and even competitors. And all of this happens without the burden of public accountability. No earnings calls, no press conferences, no need to explain. Though privately held, Vitol's financial scale rivals or exceeds many of the world's largest oil majors. In 2022, Vitol posted a record profit of $15.1 billion. Despite market volatility, the company generated $13 billion in net earnings in the following year, outperforming energy giants like BP and Shell. Its daily trading volume of 7 million barrels underscores its immense market influence. Vitol's fleet of more than 250 ships crisscrosses the world's oceans, transporting everything from crude to refined fuels. What's more, the firm trades in over 120 countries, often acting as the energy broker of last resort in politically risky regions. Vitol isn't just big, it's essential to the functioning of global energy markets. Despite never appearing in a TV ad or press release, their revenue? A jaw-dropping $505 billion in 2023. That would place them among the top 5 companies in the world by revenue, just behind Apple and ahead of ExxonMobil. However, Vitol's low profile doesn't mean it's free from controversy. In 2020, the company paid $95.7 million in fines after US regulators accused it of bribery and market manipulation across several countries. In 2024, the Commodity Futures Trading Commission fined Vitol $500,000 for violating trading position limits. Despite these setbacks, Vitol's management remains tight-lipped, avoiding media exposure and public scrutiny. This culture of secrecy keeps Vitol insulated from most press and regulatory drama, though insiders say the company operates in a highly competitive and intense environment. Even energy titans like Vitol cannot ignore the global shift towards sustainability. The company is investing billions into renewable energy projects, targeting over 1.2 gigawatts of green power capacity. Vitol holds stakes in solar and wind farms, battery storage systems, and electric vehicle charging infrastructure. While fossil fuels remain the core business, Vitol is hedging its bets to thrive in a low-carbon future. Its dual approach, profiting from oil today while investing in tomorrow's energy, positions Vitol to stay relevant as climate policies tighten and energy markets evolve. Unlike many corporate giants with celebrity CEOs, Vitol prefers anonymity. The company is led by a group of partners who have risen through the ranks internally. This collective leadership style avoids the cult of personality and keeps the company focused on trading excellence. Its partners maintain control of strategy and decision-making, ensuring Vitol's unique culture persists. This partner model creates intense pressure. Vitol employees are expected to perform, and those who succeed can earn tens of millions in bonuses. But there's no room for error. Insiders describe the company as demanding, secretive, and cutthroat, yet deeply rewarding. And because the company is private, those profits don't just go to shareholders, they go to the partners who built the empire themselves. With energy markets growing more complex and climate policies evolving, Vitol's future will depend on its adaptability. Armed with immense capital, a global network, and deep market knowledge, Vitol is poised to maintain its dominance, whether in oil, renewables, or emerging energy commodities. Though it may never be a household name, Vitol's influence over the energy that powers modern life is undeniable. With unmatched cash flow, a decentralized global footprint, and zero media exposure, Vitol is better positioned than most to survive, and maybe even dominate. Whether it becomes a renewables powerhouse or doubles down on fossil fuels, one thing is certain: Vitol will be there, profiting quietly as the world redefines energy. From humble roots to global dominance, Vitol's story is one of ambition, secrecy, and power. It's the oil empire no one sees, but everyone depends on. Thanks for watching. If you enjoyed this origin story, be sure to like, comment, and subscribe to Stag Research, your go-to channel for business deep dives and founder legacies. Got a hot take on the future of energy trading? Drop it in the comments. Mr. Stag, logging off.